Let's start with the tea sector. Kenya Tea Board coming out on Friday is saying that the country likely to match last year's record earnings of 97 billion shillings from tea exports, buoyed by stable prices and a weaker local currency. Now, the tea sector has now become the largest foreign export earner for the country. Looking at tea stocks, Williamson Tea rallying around 5% on the day, closing at 210 shillings, while Sasini gave up 8% to close at 11 shillings. What are your thoughts on these two stocks and how you'd be playing the tea sector on the back of these kind of reports?
Basically, I think the tea sector having a ride right now, with the shilling weakening, I think they're making most of the money from this. While tea prices have actually been stable, shilling trading at between 88, 89, up to 90.85 last week, which was a record low for the shilling. So definitely, this year we may see a slight or a much improvement in terms of reporting from the tea sector. Basically, we're actually seeing production has gone up. We're actually seeing a good year for them. So definitely, we may see some slight activity on the market for these particular counters.
Looking at growth sectors for tea exporters, you're looking at China. It's recorded 80% growth in exports to that country, whilst Egypt has fallen from top 1 exporter to number 3 position. What are your thoughts on these growth markets in light of the fact that we have this growing exports to the east?
Definitely, we actually expect a huge demand coming in from China. Looking at the state of the economy and the population there, definitely we may see more in terms of exports going to China. Egypt was once our largest export in terms of tea, but after the unravels we had in Egypt and in the Middle East, we've actually seen a dip in terms of how much of tea is being exported to that country. But definitely, we actually expect more in terms of export growth towards China, not only this year, also in the coming years, considering how fast the economy is growing.
Let's take a look at the telecoms sector now. Companies there facing diminishing profit margins given the price wars we've seen, and also the government coming now and cutting the interconnection fees. Safaricom, though, said to sign an agreement with Telecom Kenya to share the cost of setting up telecommunications towers. Given the fact that this stock ended flat on the week, 395 shillings, would you be looking to buy into it on the fact that it is going to manage to cut its operating expenses if it signs deals like this with the Telkom?
Definitely, we may see some activity on Safaricom based on what's going on. I think the news was that the talks are actually in progress. They've been going on for about 3 months, and we may see them actually agree to sign a deal between them. One of the major things we've actually been seeing in the telecom industry is that we've actually been seeing price wars. Prices coming down from highs of 5 shillings down to a shilling per minute to make calls, definitely eating into the revenues of these companies. But once we may see this coming in, we may see Safaricom actually now looking at ways of actually reducing its cost. We actually saw last year, we saw them actually reduce on the upper management costs, but actually cutting down on the number of managers over there upwards. And also we actually seen them also now coming in to actually partner with Telkom to actually set up infrastructure, which is a major cost for these actually companies when it comes to providing their services. So going forward, I think for me it's more of a 50-50 chance for it. We may see revenues slightly pick up in case this thing goes through, but that is normally a forward income that we may actually see coming in. So definitely for me, I think it's more of a wait and see. We're actually seeing a bit of supply coming in at 4 shillings, so we may see it trade between 390, 4 shillings for in the coming week. So definitely let's take a cautious approach to the stock.
What was your take on Kenol Kobil's earnings update? Obviously a strong earnings update for the first half of 2011 there. Management expecting earnings to grow by around 50%. At a trade of around 10.30, is there a buy here? It rallied all the way up to 10.80 at one stage on Friday.
But for Kenol Kobil, there's still demand in the market. We actually saw it trade at lows of about 970 before the company released the announcement that they expect last year's this year's half results to be actually 50% more than it was last year. Definitely for them, the oil marketers, oil industry actually making a killing this year. We've actually seen oil prices move from 80 shillings to the litre to highs of about 114, 115 shillings to the litre. Definitely for them, that's a plus for them. And actually been seeing oil prices actually soaring between 105, 110 in the past year. So definitely for them, we may see more demand coming in for this particular stock, considering that's only half-year results that we expect. But going forward, the second half of the year will actually be quite favorable for them. So definitely there's a bit of demand coming in for the stock at levels about 10.50, 10.55. So we may see actually an upside potential on the stock.